Welcome back to the FlipNerd.com REI Classroom, where experts from across the real estate investing industry teach you quick lessons to take your business to the next level. And now, let's meet today's expert host.
Hey, and welcome to the REI Classroom. My name is Michael Blanc, and I'll be your instructor today. Today we're going to talk about the methodology for picking the best areas for multifamily deals.
This show is sponsored by PassiveRental.com.
It kind of all starts with the area you're investing in, right? And there's so many different places you can look. So how do you kind of narrow it down? A lot of people would like to invest in their backyard, but a lot of people can't, right? Because everything is so overvalued, and it forces us to kind of look elsewhere. But maybe we don't know that area as much, and so that opens up the entire U.S. How do you narrow it down? So here's kind of my three-step. I'm going to give you kind of three steps to what I look for, and I'm going to give you three reports that you might find helpful in helping you implement this. So criteria number one is look for areas you like. Maybe you have an affinity to a certain place. Maybe you have friends there or a family there, or maybe you like the sun, or maybe you like to ski. I don't know. Just make a list of cities you like. Just start there, right? So that's number one. Number two, you're looking really for, number two and three, you're looking for a combination of high yield and high growth areas. So what I mean by high yield are areas that are maybe not as overvalued or pricey as some others. For example, if you're in San Francisco or Manhattan, real estate's really pricey. People are willing to pay all kinds of money just to get real estate there, but the returns are really low. Versus more in the middle of the country, the yields are going to be higher, right? So can you find an area that has high yields? But you want to couple that with number three, which is finding an area with high growth. Okay, so what you're looking for is economic indicators that have job growth coming in. You don't want declining or stagnant. You want something that's in the works that is creating job growth and that has a diversified employment base. So those are kind of the three that I look for as well. So how do you do this? So I have three reports that can help you with this stuff. The first one is the Marcus and Millichap National Apartment Report. And to find these things, I would just Google these things. So I just Google Marcus and Millichap National Apartment Report. You get it for free. You just got to put in your email. And what it does is it ranks different metropolitan areas by various factors. For example, vacancy and rental rates, sales trends, cap rate and yield, employment growth, that kind of stuff. They have different kind of indicators for high growth, etc. It's a really useful tool, but it's only available for some of the larger, maybe the top 20, 25 metropolitan areas in the United States. The second one is called the IRR Viewpoint Report. And you get it at IRR.com. And what's interesting about the IRR Viewpoint Report is that it looks at various different metro areas in their market cycle. So, i.e. what they call a recovery or expansion all the way to hypersupply, right? So it's kind of this bell curve, right? So where it's a buyer's market, a seller's market, and the real estate market is all cyclical. And we've seen this over the years, and it maps different cities on this graph. So what we're looking for, obviously, is we're looking for markets that are in the recovery phase or an expanding phase. Now, believe it or not, there's actually markets in the U.S. that qualify. Most of them are not, but there's still a good number of them that are classified by the IRR Viewpoint as a growing market. And that's what we want to focus on. We want to stay away from the ones that are in hypersupply or possibly in a recession cycle. The third report that I found useful is the Milken Best Performing Cities Report. Okay, so again, Milken Best Performing Cities Report, and you just Google that and you get the one from either 2015 or 2016, and it ranks the 200 largest cities and the 200 kind of small cities according to various different criteria: job growth, quality of living, and things of that nature. So how do you put all this stuff together? So why not start with the IRR Viewpoint Report? Okay, create a short list from the cities in the recovery or expansion market cycle. So these are cities that are expanding, okay, we're growing, where rents are going up, the sales are going up. These are expanding from a sales and rental perspective, are expanding. And then check out the Marcus Millichap report and cross-reference that with their opportunity and high octane indices, right? So these are some of the indices that they flag as rapidly expanding markets with a lot of potential, right? And then cross-reference that list with places that you wouldn't mind spending time. For example, Cleveland and Cincinnati are great high octane cities with lots of growth, but so is Florida, Tampa, Jacksonville, for example, Orlando. Maybe you have a preference for the beach. Okay, so maybe you classify the sunny cities a little higher than Cleveland, Cincinnati. The other criteria I have is I need to be able to get there in a direct flight within 2 hours or less, right? So and I'm on the East Coast. So these are some of the things you want to put together, and you kind of create a top 5 or a top 10 list, and that is really how you evaluate and narrow down your list for multifamily apartment deals. Hope that was helpful. Catch you on the next episode.
PassiveRental.com is your source for turnkey, done-for-you rental properties. If you'd like to be an investor and not a landlord, please visit PassiveRental.com to learn how to purchase cash-flowing, professionally managed rental properties in the hottest rental markets across the country. We can also help connect you with financing for your next property. Invest the easy way today and get started by visiting PassiveRental.com. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Are you a member yet of FlipNerd.com, the hottest real estate investing social community online? If not, you can join for free in less than 30 seconds and get access to hundreds of off-market deals, vendors in your market to help you in your business. And you can start networking with thousands of other investors just like you. Get your free account now at flipnerd.com. Please check out the FlipNerd family of real estate investing shows, where you can access hundreds of expert interviews, quick tips, and lessons from leaders across the real estate investing industry. They're available at flipnerd.com/shows, or simply search for FlipNerd in the iTunes Store.